What do we make of the oil stocks here? Lately, we've been inundated with buy recommendations in the oil patch. Analysts can't seem to resist the stock of, say, ExxonMobil, with its phenomenal and highly unusual 5% yield. Historically, Exxon stock has always been at such a premium to the rest of the market that the yield's been smaller than the group. Not anymore. It's tough to resist Chevron when its big projects are hitting pay dirt and CEO Mike Wirth trying to get into the Permian on the cheap, right? BP, major with the best yield, nearly 7%, has been a terrible holding, as we know all too well from my charitable trust, which you can follow by joining the ActionAlertsPlus.com club. See, there's just one teensy-weeny problem with these buy recommendations. They're not working. If you bought any of these recommendations, you're most likely down, underwater, even as the broader market is way up. How is that even possible? Iran's being boxed out of the oil market. It's 2 million barrels taken off. Venezuela's falling apart. That's another million taken off. No international producers save Saudi Arabia are spending enough to keep the production stable. This should be a fabulous time to own oil stocks, yet the group has just been mercilessly hammered. You can now get the best of the best of the best of oil service companies, Schlumberger, with an unheard of 6% yield. And the company's swearing by the dividend. There are a couple of things going on here. First, the oil stocks have become pariahs. President Trump just took to Twitter to pummel Ford Motor for caving into California's high emission standards. Even the automakers have given up on fighting for fossil fuels. Second, perhaps more important, we got way too much supply around the world, and that's why some of these international companies aren't bothering to drill a lot. The United States is pumping far more oil than we expected, with the Permian Basin leading the way. We now produce 12 million barrels a day, and we could soon be producing 17 million. Thank you, Mr. Sheffield from Pioneer Drilling, telling us that. 2 years ago, we were only doing 9 million. We got to export this place. We don't have any place to put it. Third, the actual oil stocks aren't showing any lift because the oil companies are being disciplined. They're not producing more crude than they should. Given the weak balance sheets, I think many of them are too dangerous to own anyway. Fourth, it's not just oil. America's producing an immense amount of natural gas, and we have nowhere to put that stuff either. We're shipping about 6 billion cubic feet of equivalent out of the Louisiana docks. The world loves our liquefied natural gas, but because it takes years to build an export terminal, we still don't have enough capacity to rid ourselves of the glut. Fifth, with the oil stocks this week, you might expect a bunch of this. Yeah, really, they're so damn. Wouldn't you expect a bunch of mergers? But they just aren't happening. That's because Occidental paid way too much for Anadarko, and nobody wants to repeat their mistake. Finally, the investment bankers brought a ton of pipelines and oil names this year, brought them public, and we got no room and no appetite for those either. This group is simply terrible. It's a true house of pain. I think you got to skip it. As long as we're awash in oil, the price of crude will stay stuck in the 50s, and the oil stocks aren't going anywhere, except maybe down. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.